So, Bola, please help us out. How do we sort of do a checkbox and make sure that what we're investing in is a verified and legitimate investment opportunity?
Yeah, thank you very much, Bonnie, for that question. So I think the starting point would be to reiterate what has been said earlier, the fact that regulation cannot be overemphasized when it comes to investment. And I think to sort of bring it home to our audience from wherever they are listening to us, I think if you're in United States, for instance, before you invest with an entity, you want to make sure that that entity is duly registered with Securities and Exchange Commission in US. If you're in United Kingdom, you also want to carry out your due diligence to ensure that that entity is regulated by Financial Conduct Authority. If you're in Canada, the structure of the regulatory environment is quite different. So it's based on, province, and you would have a regulatory body that has jurisdiction over activities within its province. So if you're in Ontario, for instance, you'd have to make reference to Ontario Securities Commission to ensure that whatever entity you are dealing with, that entity is duly regulated by the commission. So the same thing also applies to Nigeria. The apex regulator is Securities and Exchange Commission. So the first point of action would be to go to the website of SEC to ensure that that entity, for instance, First Asset Management, you are duly registered and regulated by SEC. So if you go to SEC website today, you'd find First Asset Management as one of the leading asset managers in Nigeria, duly registered by SEC. Secondly, I would also say that I've spoken about superior returns in Nigeria compared to what is obtainable in developed markets. But I think as part of due diligence, investors should also be wary of, I think, unrealistic returns. So we are familiar with this popular saying that if it looks too good to be true, then more often than not, it's not going to be true. So I think there are returns that you earn. On the surface, 30% in a day, 30% in a week. On the surface, it looks unrealistic. So I think that's one other red flag that should jump at you as an investment that is risky or a fraudulent investment scheme. Another point I would also like to emphasize on is transparency. Again, these are points we've mentioned, but just to expand the scope of transparency, you also need to have a firm understanding as to what that fund manager is invested in. So for all of our investment schemes, you'd find out that we invest in products that you can actually, verify, and you have a clear understanding as to what you're invested in. Take, for instance, the money market fund that invests in highly liquid money market instruments like treasury bills issued by the government, placement with deposit money banks. If you look at the bond fund, for instance, that also invests in federal government bonds, corporate bonds. If you also make reference to our dollar-based funds, be it the First Asset Dollar Fund that invest across diversified, USD fixed income instruments like Nigeria Eurobonds, corporate Eurobonds, money market instruments in USD. So these are all instruments that you can see. So there is no secrecy. It is very much, transparent for you to have an understanding about the composition of the fund, in terms of what the fund is invested in. So I think those 3 points are very fundamental in ensuring that you don't get into a fraudulent investment scheme. And lastly, I would also say any form of scheme that is designed or structured in such a way that new investors have to come in to sustain the operation of that scheme. Certainly, I think this is a no-brainer. So any scheme designed in such a way that new investors have to come in, and it's those investors that would sustain the operation of that scheme. And I think this would also come across as fraudulent investment scheme. So just ticking the boxes across those 4 points will ensure that ultimately you are committed to investing in a sound investment scheme.